As Asian stock markets experienced a downturn, global investors are on edge, nervously anticipating the outcomes of the impending Federal Reserve meeting in the United States. The focus on this meeting is driven by a pervasive concern that U.S. interest rates might not only remain at their current high levels, but could potentially increase, echoing the pervasive fears that triggered substantial sell-offs across international markets, including Wall Street. The ripple effects of these fears were evident in the notable declines across major Asian indices. Japan's Nikkei 225 took a significant hit, marking its most substantial decrease since December 2022. Similarly, Australian shares fell, contributing to a broader atmosphere of market apprehension. The impact of these movements was exacerbated by the closure of several key Asian markets for public holidays, which led to reduced trading volumes, heightening the sensitivity of markets to any international financial news. Kyle Rada, a senior market analyst at Capital.com, articulated the prevailing market sentiment, suggesting a cautious approach among investors. Given the public holidays in key markets like China and parts of Europe, we're seeing thinner markets. This situation is likely to amplify the usual cautiousness in Asian trade today, especially with investors bracing for the Fed's decision, he explained. Rada also warned of the potential for a deeper market sell-off if the Federal Reserve signals its intent to either maintain the current high rates or even consider a hike. Financial markets reacted in a somewhat mixed manner to these developments. The Japanese yen remained steady, showing resilience in the face of market volatility. The U.S. dollar index also stabilized after its recent gains, reflecting a cautious optimism among some investors. In contrast, the bond markets showed diverging trends, with U.S. two-year Treasury yields slightly decreasing after reaching a peak since November, while Australia's 10-year yield saw an uptick, suggesting varying investor expectations about the future of global interest rates. The currency markets, too, are expected to face continued instability, particularly in the U.S. dollar to Japanese yen exchange rate. According to Tony Sycamore, a market analyst at IG Australia, recent interventions by the Bank of Japan are just the beginning of what could be a prolonged struggle. We're likely to see a sustained battle between the macroeconomic forces that have been driving the U.S. dollar to Japanese yen upwards and the efforts of Japanese monetary authorities to manage this rise, he noted, forecasting a volatile trading range for the currency pair. Amid these broader economic concerns, some sectors have shown resilience. Notably, Lasertech, a leader in the semiconductor equipment industry in Japan, reported a substantial rise in its stock value following strong order growth and earnings that surpassed market expectations. This positive development indicates that, despite overarching market trends, individual sectors and companies can still perform strongly, buoyed by solid fundamentals and growth prospects. In the commodities market, gold prices experienced a slight increase, attempting a recovery after falling from record highs in mid-April. Oil prices continued to trend downwards, influenced by emerging reports of a possible ceasefire in the Middle East, which could reduce geopolitical risks and affect global oil supply dynamics. As the financial world turns its attention to Federal Reserve Chair Jerome Powell's upcoming remarks, the stakes are high. Powell's previous statements have emphasized the ongoing challenge of controlling inflation while maintaining a robust labor market. With a critical U.S. employment report due soon, these comments will likely play a pivotal role in shaping future U.S. monetary policy. The anticipation of Powell's speech and the subsequent policy decisions are expected to have significant implications, not just for U.S. markets, but for global financial stability, underscoring the interconnected nature of today's global economy.